Hello and welcome to another video. Today I will talk about the best high yield safe ETFs that are cheap to buy and good for long-term portfolios. ETFs are like stocks. You can buy and sell them, but they are safer and for long-term investments. The first one is SCHD, Schwab US Dividend ETF. You can buy a share right now at around $65. And you will get an annual yield of about 3%, which is good. This ETF tracks Dow Jones Dividend Index. It is very resilient. You can see from this chart, it completely recovered from the last crash in March 16. So you are getting a good, cheap and diversified fund that is safer than other stocks and ETFs. Top holdings are Coca-Cola, Pepsi, 3M, Qcom, and many other big companies. This is one of my favorite ETFs and good for the long run. As you can see from the chart here, it was at around 58 and in March it dropped down to 39.50, but it completely recovered. It's now at 65. The next one is Noble, ProShares SP 500 Dividend Aristocrat. Currently sitting at $81, annual yield is 2.14%, which is still better than average. This is one of the best ETFs and it actually outperformed many other. This is a very resilient ETF and it completely recovered from the March crash. It was at 58 in February, then went down to 39.50. Now it's at 65. Top holdings are AbbVie, Exxon, ADP, Chubb, and many other good companies. As with the first one, this is a very good long-term investment. Number 3 is SCHB, Schwab Broad Market ETF. This one tracks the total return of the Dow Jones Broad Index. Currently sits at $93 a share. It has the lowest yield of the ETFs I'm comparing at 1.63%, but it outgrew the rest, and it's currently growing very fast. In February it was at 80, dropped to 52, and now it's at 93, and it's still growing fast. The top holdings are the big tech players, such as Apple, Microsoft, Amazon, Facebook, Tesla, Google, Berkshire, and so on. So if you like to invest in giant techs, this one is for you. Number 4, VYM, Vanguard High Dividend Yield ETF. Currently at $94 a share, gives a nice yield of 3.18%, which is a little higher than the rest, but it's not as resilient as Noble or SCHD. It's because it's more volatile and goes up and down quicker than the rest. It barely recovered recently to its level before the crash, so it's slower to cover as well. But in the long term, you should be fine holding it. The top holdings here are Johnson & Johnson, JP Morgan, Procter & Gamble, Pfizer, Walmart, etc. Those are still very good companies. Number 5 and the last one is SPHD, Vesco SP 500 High Dividend. Although I don't see it as stable as the SP 500, that's because it gives high dividends. It currently sits at $38. And you get around 5% yield, which is very high, actually the highest in the 5 ETFs. But it has not performed well in the past year at all, and still has not recovered fully from the last crash. It's sitting at 38. Before the crash it was at 42. So those who bought in February have lost about $4 a share. Also, it is very volatile compared to the rest. Top holdings are Dow, Iron Mountain, Exxon, and so on. So these are the 5 ETFs. My personal opinion, My top 3 favorites are SCHD, SCHB, and Nobel. I hope you enjoyed this video. If you liked, please subscribe, and I'll see you next time. Take care.